Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boo, we go into the charts. So Bitcoin has not really gone anywhere in 24 hours time. Let's just go to a daily candle to demonstrate. We literally have returned to the open of yesterday and have been in this consolidation range for the last 3 days in exactly the same price range from 400 to the 276 region, going off of this local point of control on the Coinbase chart. We're actually below the point of control on the Binance, interestingly enough, and this is the mean reversion path to the upside below the 0.5 equilibrium level on this upwards trajectory. Do we continue lower to the 0.382 and this 3618 of this point control of the previous 60-day consolidation phase here, or more than that if you include this entire region? Let's go into the high block capital and see if anything has changed with Bitcoin's lowest volatility in its history. So let's go see how slow it is on this Wednesday as we go into high block. Well, what is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are and where they lie in wait. Shout out to everyone here. Let's go ahead and take a look at what's going on now. It looks like they're going down into these small, not even double digits pools of 100x longs that they're going to gobble up here and bleed out into the $67 million character down at 29.1 perhaps, and take out this entire orange block of longs as of this moment in time. Are we going to make our way down to sub 29k? Let's find out as we expand our vision to the higher time frames. Let me make sure this is proper.
Visible effort that goes into a product.
All right, so the 7-day time frame we have here is pretty much gearing up for both sides there, even Steven, with $4 billion pools on either end here, from the sub 29k region to the 28.3 region to the 30,005 region. There's even Steven on the 7-day time frame. No imbalance in one direction or the other. If you look at the previous imbalance that was taken at 30,200, there was a thicker band of liquidity up here, the $16 billion. We were here for it. We did call out that idea of taking that up to the upside there. Shout out if anyone took that scalp and it was not sustainable as they start to build more liquidity. So there is some $16 billion building up in the 30,500 region. So are they slowly making a pool to stab up to this region? But they're also building these ideas of double-digit figures, these $50 billion down in the 28, 1, 2, 3, and 4 regions. So coming down to this region has $40 billion and all that nice little bit of happiness down there. We're here for it either way. We are flat as a pancake right now on Bitcoin because the price action is flat and range bound. If you look at the overall gist of things on the monthly, it's also pretty even Steven, although you do have the double digits up at 30,005. There's no thick region up above to insinuate going higher. Most likely we're going down to the 29k region, if I do say so myself, looking at this chart alone. If you start to juxtapose it and expand your vision to the higher time frame of the 3-month and the 6-month, you'll start to notice that there is some liquidity down in the sub 28k range, but most notably in the sub 25k region. If you go to the 6-month time frame, you're also going to see that there is that sub 25k down below here in the 24.6 and 24.3. And yeah, if we ever get that stab and break the 27K region, then we are coming down to this at some stage. However, you do have these $100 billion pools up in the 32.1 and above region. Most notably, when you go to the external liquidity pools of the 2-year, you start to see this in its prominence up here. $198 billion at 32.4, $188 billion at 32.8, and $197 billion at 33.2. So $600 billion up there, and $241 billion down at 24.4, 130 at 24 even, and 201 at 23.6. So you got nearly the same down below as well. So you talk about rock and a hard place. Where does Bitcoin go from here? Are they waiting for some sort of news play? Is BlackRock accumulating in this region for an ETF approval, and this is their way of killing retail interest? I don't know, but let's go ahead and see if we can see some momentum sneaking into the charts as we go into. So we previously had a reaction off the 706 of this range. We can remove this pocket and make it a deep pot retrace now, because the deep retrace has been hit of the 706 region. We had a reaction off the point of control and the 706 region of this, and if we break beneath these levels, then these 886 and 786 bounces are the next potential idea here. And then if we also put the trend-based fibs here from top to, whoops, not this one, trend-based regular extensions from this top point to the bottom point here, and move it to the equilibrium. We previously had an equilibrium rejection here, so this equilibrium rejection shows that there's more bearish sentiment than bullish. You didn't even make it to the 618. So if we do somehow fake out to this region, you can watch for a reaction at 29,777 that we did ascertain there is a pool at this range high region. So we'll just leave that on the Coinbase chart and make our way to the Binance chart. As we break 29.3, so the point of control on the Binance chart, as you see, is different here. It is higher in this recent volume that entered here, raised it up to this region. It was previously down here at the 706, and we saw a bounce off of that. I can go back and show you when I moved this a little bit 2 days back. This is where we were when we saw that reaction off this point of control, and then the volume increased now. So the current point of control is up here, and we are getting rejected off of that as of this moment in time. If we look at the fibs levels that we're at, we have this impulse retrace continuation to the downside at the 1 level, and we've been maintaining this 29K region for some time now. Do we see a further retrace into the Hail Mary play at the 1618 at 28,152 region, or the point of control of this previous range? There's a lot of confluences that add up to this being the case. We've had it as a point of attack vector for some time now. We are here for it either way. And yeah, we have that pool up here coinciding with the 29,752, same as the Coinbase we just showed you. And let's throw on our heads up display and take a look at the momentum in the charts. Link in the description for more. This is momentummaster.info. You can scroll down to features, toggle this from Bitcoin's local bottom, not even local bottom, the absolute bottom at 15K. Before we knew it was a bottom, and you could read at each thing like the stochastic array and why the rocket ships appeared there, because it was monitoring 32 different indicator values over 7 time frames of information. That's why the 5s played out, and we took that 5 play to the upside. So let's see if we can find some sauce that we can take as well. So cloud is thinning, but we're slowly bleeding out here on the daily time frame. Are we getting this bleed out of volume as we go sideways here, slowly people selling off their positions perhaps to accumulate down below, and this is a slight distribution. People within the Momentum Master Discord call the B consolidation idiot boxing, because only idiots would think to enter in the consolidation for a swing play here. So you have this A leg down, A, B, C would make this a bigger leg to the downside. So you would have this kind of rise, retrace, continuation idea playing out, and this is just consolidation where the people are offloading their positions to potentially reaccumulate down in a cheaper discount price, if you will. The premium versus discount idea we've gone over multiple times here on the stream. We're not going to do it today, but you would not buy a car as the price is increasing, you would buy it as it decreases. So the demand zone is down here more than it is here. We saw that previous reaction. We took it for the scalp that it was worth within the 618 of this local discount range, but this ultimate B zone is all just trash consolidation, which leads to ultimate continuation of the trapped traders that are up here in these candles hoping for a way out. And so that's what this ABC lightning bolt is. It's you trap some traders and then you get them to dollar cost average and then you liquidate them. And that's basically why it's so simple. So if we look at the daily time frame here on the oscillators, you're just meandering around ambiguously on the stochastic RSI. The money flow and the RSI rejecting the 50 level could be coming lower here. Williams attempted to take off, but now going ambiguously sideways. So there's no volume also stepping in with the PVSRA strategy here. If we start to lower our scope of focus here on the 22-hour time frame, starting to scoop up well. One interesting thing to note is the money flow is extremely beneath the RSI. We did talk about how the money flow coming beneath the RSI insinuates a stab to the upside as we got here. So this disparity between the money flow and the RSI does suggest some move might be inbound on the 22-hour time frame. This baseline suppression is something you don't want to ignore. We ignored it for that scalp because of the stochastic array contradictions, but as the contradictions prove themselves to be weighting to these baselines, what are the baselines? Well, if you go to the baselines here, they're your first sign of reversal. The baselines are one of the few leading moving average formulas you will find in the market. So when they cross down here as they did on the 12-hour, until we closed this candle, we talked about it needed to close above a certain level here, which was this 30,000, but ultimately needs to get above here to be bullish. So we're seeing this cross down suppression, the point of control rejection, this 12-hour candle breaking the cloud here. So we could be coming lower, ladies and gents. As it stands, Bitcoin is weak, low volatility to say the least. And if we look at the 12-hour time frame stochastic, you are coming down here to reset. The money flow is coming beneath the range. So if we could just get this Williams to come a little bit lower into this green region and create a fertile crescent with the rising sun, we could possibly get a bounce out of here. So we need that liquidity grab. Let's go to the external range and grab it. So we previously had some bullish divergence on the 6-hour, which played out to the upside for a short little scalp, and with these two green vectors, which could be considered stop hunt, rise, and they're dropping it. So you have 1, 2, 3 hits to the high. If we look at this in terms of a larger structure here, you have one hit here, you have another hit here, and this could be your third hit before you shift out on that B leg we just went over. So we could be breaking this point of control, breaking this entire deep retrace idea, and coming down into either the bottom of the Keltner channel and breaking down below. This 28,690 region wick has yet to be reclaimed, so this is an interesting point here at 28,690. We have yet to reclaim that wick. If we go to a different time frame, when we lower our points here, the 6-hour time frame is resetting too, so we are getting that downwards momentum on the 4-hour as well. So the 4, 6, and 12 are pointed to the downside, starting to reset here in a manner. We have 3 hours for the next 4-hour candle close. You are getting 5 time frames oversold, but oversold doesn't mean they're at the edge of being oversold. They aren't in this oversold curving up region just yet, so they should be able to come down a little bit more. And you got 3 hours for the next 4-hour candle to close here. If we look at the volume had shifted in a bearish manner here off this sell-off here, so this is insinuating that you could get this suppression some more. If we overlooked the cross down events on the 6 and the 12 hour. So the 6 and the 12 hour time frames are suggesting that this cross down has just been holding thus far. We had an opportunity to cross back up here and that did not occur. So you're seeing the suppression of price with this cross down event intact on the 6 hour, also intact on the 12 hour, and also intact on the 22. So the one thing there's no bullish signals on anything right now other than this cloud, which is getting rejected. The one thing that you are showing is the stochastic array saying 6 time frames are oversold here, which triggers generally an algorithmic bounce. And so you can read about the stochastic array and why it does that yourself. We're not going to give up too much of what it's looking at, but we do a fairly good explanation of how it's 7 time frames of information considering over 32 different indicator values. It's more than a human brain can handle. Let's just put it that way. So it's a smart array. That's why we call it the stochastic array. Never before seen on the market. All right, so we saw this before closing on higher time frames. We were seeing the 6s and the 5s, and when this started to dump out here, we said the liquidity grab was enough for me, and we took it to the upside for about 6% with some leverage. And yeah, we're going to see if we can find that sauce to appear again. On the 5 minute, you're getting oversold, 15 minute oversold, 1 hour oversold, 4 hour oversold. See, I don't need to look at other time frames because you have this nice little multiple time frame screener here on the bottom left, and you also have the, what is that called? That's the stochastic health that appears there too. So you can see the stochastic health of all the important time frames right at your leisure, and we're getting lower RSI values as well. Getting rejected off of the weighted moving average here. The 200 weighted is rejecting us, so we could come down into these regions, start to recover some of this liquidity down here at the 29K region. If we look at that, that's also coming down into these 100xers, and the 76 million at 29,152 is just a hop, skip, and a jump away. And then if you look down even further, you got his partner in crime down there at 28,816. $75 million will clear this range entirely. So coming down to 28,881 would be nice to see. And here we go, we're getting the move to the downside. 28,871 would put you at the 886, I believe. Let's just confirm that. 816. 871, so it would wick down beneath the 886. So I know there's some 886 and 786 traders, so you could get a reaction off these, which is why we have a template for deep retraces. So sometimes they have reactions off the pocket, which we saw, the golden pocket reaction, and then they also have a deep retrace reaction sometimes. So you might find some, if you're in a short, you might find some resistance at these 886 or 786 levels, but if they burst right through it, then they're going for the external range, ladies and gents, and the external range could be all the way down in these highlighted zones that we've been hoping to see for a potential reaction on this 618 idea here. Let's go take a look at total real quick. Make sure the total is where's total at. I saw total 3 and the altcoins were making a little bit of a rally. 𝗥𝗲𝗹 and Rune and a bunch of other coins were in the top 10 for the day. So I was seeing total 3 had more action. It had to recover some of the levels here. So this is the bearish trend-based fib level. Until you break this block, you are not bullish at all. And as it stands right now, we're at the trend adaptive moving average. We're just beneath it. Moving average is getting tight. Cloud trying to come beneath the price here. Keltner channel getting thick. Interestingly, we have reclaimed the 0.65 here. So we're holding this region, shoulder head and possible shoulder up. Interesting on total market cap. Total 3 already dug its own way out of the dirt on its own. So is this preemptive blast with 𝗥𝗲𝗿𝗁 and a bunch of other institutional coins an insinuation of a move to come from the banks? Are they trying to pack up their altcoins for a little bit of a ride to the upside with Bitcoin at some stage? We were talking about the idea of USTD dominance growing, which means if this dominance rises, this means that people will be getting knocked out into their USDT. So this insinuates a drop. And the Bitcoin dominance we were saying would possibly rise. We saw a previous drop in the dominance. I'm going to erase this to not get the bias here. What was that curvature in the cloud? I think it was like an 8-hour or something. No, it was a higher time frame than that. Daily? Ah, it was the daily. So the daily on the Bitcoin dominance is starting to reclaim the cloud here, and the cloud is getting ever so slightly thinner, and this curvature is the preemption of a potential Bitcoin. That's why we had this. So we had this ABC kind of idea, because at some stage, wherever that B decides to stop, it looks like the daily time frame is attempting to reclaim the cloud and start to thin ever so slightly. So the Bitcoin dominance, if the dominance rises with the USTD dominance, this insinuates that you could have some problems, a drop, if you will, because then when the dominance rises, every Bitcoin becomes the star of the show, and if USDT dominance rises alongside it, it means people are getting kicked out of their altcoin pairs into BTC, you see? So all the altcoins crash as Bitcoin drops, everyone gets knocked into Bitcoin, which raises the dominance, and then they get kicked out as their stop losses hit into USDT, raising the USDT dominance more. So this is insinuating a potential dump to the downside as you reclaim this cloud, and it's slightly getting a thinning with the expansion idea in mind. So what is the trend cloud? You get beneath price action beneath that cloud, and it starts to go up. So that's what we look for in terms of that retrace continuation idea. Not quite thinning just yet on dominance though, so it's getting thinner on the daily, and that's why we had that curvature, and it's holding. And you had this previous cross up of the baselines here, and are we going to reclaim the fat boy and start to continue or not is the question. So total holding, but once again, until you make it above this region, you're not bullish, you are bearish. This is a bearish trend-based fib, so coming back above this region is your normal consolidation range resistance levels to scalp range trade. But if you break down, you will break down to these $1 trillion levels of market cap. So we're back down at 280, getting the 6 time frames oversold. So how does the stochastic array work? We always talked about this the other day when we were taking the trade for the 6 time frames oversold. So you look for how many hours and higher time frames close with this oversold status intact. As it stands right now, there's no history of this, and if we go to higher time frames, do you see any history there? No, you do not. You have one 4-hour candle which closed with the 5, here closed with the 6, which was interesting. So when you see these exhaustion points close with these higher time frame exhaustion levels, the probability goes up of a reversal. So normally it triggers a stop loss hunt and then you reverse. So how low does this stop loss hunt go? And then we'll be here to see in the next hour for where the 6-hour candle closes. Does the 6-hour candle close with the 6 intact? If it does, this could be an interesting idea for a reversal. We need to see, I would like to see a large liquidity grab though. This is just still within the silly range that it's been in for 2 weeks now. Coming up on longer than that, isn't it? Let's see. Date and price. So it's been about 21 days. So we're like in a range for like a month, and then we dropped to a smaller, lower range for a month, and then we dropped, it's like the slowest drop M1, M2, M3 drops in the world, like a month per repricing. It's pretty pretty boring if you've started trading NQ. So yeah, that's interesting. We'll keep an eye on that in the back burner while we're going to, speaking of NQ, we'll go into what we were doing today with the NQ futures, NASDAQ futures. Okay, so we're going to go into the 30-second. This is the 30-second chart. We're going to split our screen here and take this and add the Optima. Optima has not been officially released, but a lot of the Momentum Master users are making use of it. And what you see here, for example, you had this rise up here and you were getting bearish divergence on the Optima, and you even got it back here. So you had these into the market open. I was saying it was a trap. Let's just be transparent with what we were looking at here. So we were talking about potentially going higher, and we were saying how low will we retrace off of this cloud? And then we started to, where was it? We missed this push up, but there was bullish divergence on the indicator suggesting you could go higher. We missed that. But then we started seeing this bearish divergence form on the 1 minute, and we were talking about potentially going down, getting some bear div, and then we started to see this play out. And then we had this kiss of hidden bullish divergence, and then this was going into the open, and the cloud was thick, and then we said we were getting trap vibes here because this was making a lower high while this was making a higher high, but we still took that for 80 points to the upside, and then we were getting those downside plays, and everyone took the shorts to the downside, and we saw this trend-based fib level hold at the 236, and it started to have money fly away and break to the downside. So this is what we were seeing on the oscillator as it started to bottom out here. So we always, just like the day before, we had this leg down, and then you have this fake trap that triggers and went for a third leg down, and it did it a second time, and then you started to see this bullish divergence forming, and it was also forming on the 1 minute. You saw the money bag here, money bag, and the diamond here was your clue with the cross up event. Also, this was a larger 706 level, fib level. This is why it's blue. And so we had confluence on confluence on confluence, so we took that trade, and we were talking about that in the group. We said final DCA stab to the longs. It is the people getting dollar cost average killed here, and then we said this is where you would be looking for it with the money bag here. And we said we reclaimed the cloud, so we're going to talk about what the reclaiming of the cloud means here. So let's zoom in. This is also true for NASDAQ. What's good for the goose is also good for the gander. So you see this breakout above the cloud. We kissed the cloud started to thin, and then we took this up, and we were talking about having a trailing stop loss using Momentum Master A, and that kept you in the trade, and then you got this kiss to the 0.5 retracement of this, and we were gone. And this one was taken for a good 221 points, and we talked about how this would be your clue for the second entry if you didn't get in on that first leg. And yeah, shout out to those who took it in the Momentum Master crew. So yeah, that's how you trade NASDAQ futures on into the open, or rather thereafter, the reversal into the hour after the open. And that's all you need. That one single hour can pay your bills if you're accurate enough. And so what we're seeing right now for the NASDAQ futures, let's go ahead and just take a look at that. We have the do not enter, do not enter, do not enter, and we started to get this reversal. You're starting to get this bearish divergence flame play out as you start to rotate back down to the downside here, getting rejected off of the weighted and the adaptive moving average here. This could be a C wave back down again. Cloud is pretty thick here, so you're probably going to get back down into these levels. And you could, since we already tapped this, you could just say a pocket retrace, and then if we extend this back up to here, if you are going to have a reaction that could be down in that region. The bearish trend-based fibs didn't play out 100%, so we'll just leave that there because we're still getting some reactions off of those fib levels. So we're getting some reactions off of here, so we'll leave it up. But that's how we draw the fibs as well. So we're starting to see this breakdown with the bearish divergence here, and the C wave to the downside as they trap more traders, and their dollar cost average fails them as they get liquidated, and we see the money flying away as they get liquidated on NASDAQ. So you got to be really fast, quick for decision making, and that's where the Optima has you at hello, averaging 5 time frames of information. So we're going to get out of that for a minute. That's just a recap of what we did within that 1 hour time frame here. It was enough for the day. So let's go back to Bitcoin and see what is going on. Are we going to get a bounce out of here? Are we still trapped in this range? What's going on? We recovered this wick. Oops, we got to go back to so let's look to see how the 6 hour candle closes. The 6 hour candle in 49 minutes. How much stochastic data does it give back, and does it lock this 6 into position? I'll be willing to put a little bit of a test on the line for the stochastic array again and see what the stochastic array gives. If you get these 5s and these 6s, they're generally pretty decent metrics to measure for a bounce. So we'll see how it goes. Does it lock in on the higher time frames or not? You got the 5 here, which triggered the stop loss hunt to the upside. So can we get like a 6 here or not? Oftentimes when there's low liquidity or they're trappy, they do fake out these 6s occasionally. They're accurate about 70% plus, which is better than most indicators. But if you go back in time, let's just go back to where they were inaccurate. I'll show you a time where it was inaccurate, okay? So here's one where they reset and they played out. But let's go back to a time where it like totally did not play out, and that was back here in April to May. So you had these rocket ships which did play out, but then here you had a lot of downside that didn't, and this was what got me to back test different time frames even harder, because I was like, why didn't it play out? And this was supposed to be where you got the market reversal, but that's where they had the Luna collapse in April, back in May here. And wait, it's back here actually. So you had this rocket ship which was pretty deadly accurate, right? And then that played out pretty well. I believe 𝗥𝗲𝗍𝗿𝗁 put it out on his channel. Maybe that was the May one, but it was pretty good. And around April, this the April Fools was that everything was reset and good to go, and they just dumped it off the adaptive here. So you had everything good to go on a lot of lower time frames, and it just decided that was where they were going to drill the price to liquidate Luna and eventually all of the other things. And so you had a lot of these times where it was oversold and it just didn't do anything. So when there's price manipulation, they do send it down further. So we're going to show an instance where it was inaccurate and it didn't play out at all. So they do play out, and then when they get manipulated by larger players, like whoever was running the short to liquidate Luna, then you saw these not play out. But even if you were to take this, you would have gotten at least to be able to stop into profit. But it's pretty accurate. Back tested for a year and a half or more. Even if you take these fives, they do play out most times if they lock in on the hourly or higher. So if you have Momentum Master, you could just back test yourself and play this replay mode with the stochastic array only, and then see how accurate the stochastic array plays out. But so for example, it gets to the overbought, you take the rocket to the overbought region. We're in a bearish one, so you just take it for whatever they give. I believe it was May where they started to liquidate Luna, so there's maybe that was here, yeah. And so this is one of the few times where the rockets did not play out at all, and that was because in the history of Bitcoin, and that was because you had that liquidation event to depeg the stable coin, which was run by Gemini and a bunch of other, most likely BlackRock and all those guys too. So they were running a huge sell-off to liquidate, and eventually cascaded into the event with Sam Bankman-Fried. But if you go back to the beginning of it all, let's just go back to where all of this began, when I broke my ties with the liar and went on my merry way. We can go back to here. So the schematic for Bitcoin, this schematic here is actually, I was working on it back in this point. It's basically here. This is the schematic actually, I believe. November, yeah. So it's at that 15K region. Okay, it's right here. Yep. So this schematic is this point, the very bottom of Bitcoin. And you get those rocket ships and those 4s and those 5s after having a large liquidity grab. And this is how it works. I mean, you could zoom in. This is all fractal, right? So this, I believe, is, where is that? Is that this here? I think it's this. Yeah, that's this actual bottom here. So it's the actual bottom. So if we go back to here, we're just having fun because Bitcoin's boring. So let's just take a look at the past. You can't have the few, and guess who was trying to short this stuff as we had rocket ships and stuff? Mr. Infallible himself. Yeah, so this is it. This is that schematic. So this is this. And we traced over the price action and Illustrator, and to give you what to look for a reversal event on the stochastic, on the cloud, and how you build your way out. So how these 5s and these 6s basically like look bearish as you're dumping and they're leading, so they give you this 6 like, hey, I'm supposed to buy that red candle, and it doesn't make sense, but you do, and then that becomes the bottom of the market. And on a lower time frame, there was a rocket over here. If we go back to this, and then we switch to the 5-minute or something, there was a rocket, which also alerts to your phone, mind you. So you get these dynamic alerts that come to your phone. So that was pretty cool. Gotta know where you came from to where you're going. And so yeah, when I see these 5s and these 6s, I'm tempted to long it. Just historically speaking, there's a few like abnormalities, market abnormalities, where there's manipulation which cause them not to work. But for the most part, if it follows proper momentum, it's meant to work. And the ultimate rocket ships were down here in the end. So you had the November ones at 15K, and then you also had the absolute one at just before pulling out on the 29th. Like if you go back to here, I remember seeing this on the like 3-minute, and you got that rocket ship level here, and you were getting those 5s and those 6s, and you had these previous rocket ships here. This is on December 29th, and I have timestamp stuff when this occurred. It was so beautiful. And that was the bottom of all markets when everyone was bearish AF. And Mr. I create funded traders was shorting this too. Mr. Snake Oil Salesman himself was shorting this. He goes live every day, so he basically like tries to hide, because nobody remembers. It's just like a BP oil spill. Nobody knows about, oh, is the oil spill even stopped? What about all the wildfires? Like humans have very short-term memory, but actually he did not call any top or bottom. The only one he did was 28K, maybe. I'll give him that. But that's about it. So if we go back to the price action as it stands right now, and then boom to the upside, boom, boom, boom. $3.11. So the next 40 minutes watching on that 6-hour candle close. We were here yesterday. Does this 6 lock in? And this could just be a bunch of consolidation. Like you could just be like, it could be one of many 6s, and you're just like, oh, like 3 more months of this before we build our way out. So it doesn't necessarily mean it's going to happen immediately. It's obviously proven that we've been here for 23 days now, so we could just range some more. Meanwhile, on Bitcoin. So ladies and gents, watch for the 6 to appear. There's no real confluence here. I'm not really liking this zone anymore. I would like to see some clear grab of liquidity to take us in a different direction. If we look at this, we did grab some of these 100xers, but just not enough to my liking. There's just low liquidity all around. Not many pools pinged in. No big ones like this, like the 145 million to grab. So that's about it. Sideways Bitcoin. So we'll see how it closes. Do we get the 6s on the higher time frames or not? We could see this just range trade some more, and you could just scalp it if you're so inclined. And that's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff. And we'll catch you on the flip side.